Hello everyone. I am Assistant Professor Jabin Shaikh, welcoming you all on our video on banking. In this particular video lecture, we will be covering some of the content from the chapter Evolution of Banking for the subject Fundamentals of Banking 1 for the semester 1. In this particular video, we will be covering some of the contents as introduction, concepts, meaning of a bank, banker, characteristics of bank, definition of bank, including important elements in definition of bank. So moving ahead, let us begin with the introduction. Banking is a crucial part of our economy, providing essential financial services that facilitate economic activities. Today, we will explore the concept of banking, its evolution, structure, and functions. Concept of bank. A bank is a financial intermediary that accepts deposits from surplus areas and lends out these funds to deficient areas. For understanding the concept, let us consider one example. A salaried person can deposit their savings in a bank, while a businessman can borrow money from the bank for expansion and modernization activities. Bank acts as a mediator between depositors and borrowers, facilitating the efficient allocation of resources within the economy. Let us consider and understand who is a banker, why it is important to know about him, and what is his role in the banking system. A banker is a person who conducts the business of banking. They manage financial transactions, provide financial activities and advices, and ensure the smooth operations of banking services. Bankers can be individuals employed by a bank or the owner of a bank. Characteristics of bank. The role and functions of banks in the economy are defined by a number of essential criteria. The following are a few of the major characteristics of bank. Financial intermediaries. Banks connect savers and borrowers through the economy by acting as financial intermediaries. They take deposits from both private citizens and commercial citizens, using the money to provide credit and loans to the borrowers. Acceptance of deposits. One of the fundamental functions of bank is to accept deposits from customers. These deposits can take various forms, including savings account, current accounts, fixed deposits, and recurring deposits. Lending and credit creation. Banks extend loans and credit to individual businesses and other entities. They play a crucial role in the creation of credit by leveraging the deposits they receive to provide loans and advances to the borrowers. Interest based profit. The principal source of income for a bank is interest from lending activity. Banks are able to make a profit margin or spread because the interest rates on the loans are usually greater than the interest rates on deposits. Risk management. Banks are exposed to various kinds of risk, including credit risk, liquidity risk, interest rate risk, and operational risk. They employ risk management practices and techniques to assess, monitor, and mitigate these risks to ensure the safety and stability of their operations. Moving ahead, regulations and supervisions. Banks operate within the regulatory framework established by the government authorities such as central banks and banking regulators. They are subject to regulation related to capital adequacy, liquidity, governance, customer prevention and protections against the risk and frauds, and anti money laundering, AML, and know your customer, that is what KYC requirement. Creation of money through the process of fractional reserve banking. Banks have the ability to create money. When banks extend the loans, they create new deposits in the borrower's account, effectively increasing the money supply in the economy. Payment services. Bank facilitate the payment services, allowing customers to make transactions, transfer funds, and settle payments. This includes services such as electronic fund transfer, check clearing, wire transfers, and card based transactions. Trust and confidence. For banks to continue attracting deposits and fostering customers' relationships, they need confidence and trust. In order to maintain the confidence of investors and depositors, they need to maintain their reputation for dependability, honesty, and stability. Last but not the least, economic development via financial intermediation. Banks play a vital role in allocating financial resources in the economy by channeling funds from surplus units, savers to deficit units. They are the borrowers. The intermediation functions helps to provide economic growth and development by facilitating investment and consumptions. So, moving ahead next, definition of bank, we will understand which organization or institutions are considered or to be called as a bank. A bank can be defined as a company that transacts banking business, accepting deposits, and providing loans. According to various definitions, banks are institutions that collect money from those who have it to spare and lend it to those who require it. Important elements in the definition of banks include and banking include the key concept that emerge from various definitions of banking. They are as follows: accepting the deposits. A core function of bank is to accept deposits from the general public. Providing loans. Bank offers the loans and advances to various entities. Facilitating payments. Bank plays a key role in issuance of checks and electronic transfers. Financial intermediation. Bank connect savers with the borrowers, enabling the efficient allocation of resources. Now, understand the concept. We come to know that bank plays a vital and crucial role in our day-to-day life. Banking facilitate not only our savings but also enhance the flexibility of operations by providing various types of utilities, which makes our work easy to understand and to effectively utilize it. So, in this particular video discussions, we understood banking plays a vital role in our economy. Understanding the concept of banking, its evolution, structure, and functions can help to appreciate the importance of bank in facilitating economic activities. And now we will be covering the next part in